Good morning, everyone. This is Doug Campbell with Right Way Options and your morning market preparation video for November 27th, 2017. Well, I hope everyone had a great holiday, good weekend, kind of relaxing. I know I went into this weekend very light in my accounts, and so I'm going to be looking for new trades. But I don't want folks to just chase right in or jump right in this morning thinking that, it's time to just get really active. It's really common for traders to extend their holiday by adding some vacation time. And if the big institutions aren't doing a lot of trading, you can expect some light and choppy price action. And also we have those really clever retailers, the Black Friday shoppers are, their credit cards are still smoldering from all the spending that they did on the Black Friday deals. Roll into Monday, and now we're going to be distracted by Cyber Monday shopping, which is actually starting to eclipse Black Friday, because we just love shopping online and sliding that credit card as much as possible. So be careful today. There's a real good possibility we could see light and choppy volume just as a result of all the distractions that will be out there. There will be a lot of people shopping from work today, so those poor companies are going to see productivity drops today, probably extreme productivity drops as everybody comes back and shops from work. So keep an eye on that. Now, looking at the diamonds here, the diamonds right now at this point is stuck. Nothing bad here. There's no bearishness here or anything. We're just stuck right here at this resistance high. And futures during the evening were poking down, going lower. And not more than an hour ago, we were looking at maybe about a 30-point gap up in the Dow. Now that's turned flat to just slightly negative on the morning. So we've kind of reversed again here today. So we could see a lot of that seesaw back and forth type action in the market today. So be watchful of that and don't just race right in to it. If we look at the SPY looking fantastic, just bullish. That's all you can say here. I'm going to take this line and just move it because it's no longer valid where it was. That downtrend is clearly over. Here's our little uptrend going on, and we've broken out to new highs. So everything is looking bullish here on the SPY, and it's doing the same on the Qs. The Qs nice and strong, just showing all kinds of strength, and really the Qs have kind of taken over leadership of the market, showing more strength than any of the others. Now, IWM didn't really participate after this breakout. The last couple of days is just kind of resting in consolidation, kind of like the diamonds is doing. And if I had to pick an index that I would watch as the potential troublemaker, it's going to be the diamonds. The diamonds parking right here below that resistance level would be the one I would watch. A falter here would be the one that could kind of relieve some of the buying pressure here in the market and see some profit takers come in. It could be the diamonds that triggers that. We'll have to watch that closely. So far, there's no reason for bearishness. There's no reason to think we're just going to fall off this cliff right here. But it does give us that little bit of a pause that we should be a little bit cautious and careful, not just blindly leaping long this market. So kind of watch that and be careful. Now, one thing interesting I don't know if anyone caught this, but on Friday, the VIX, this was really quite remarkable. The VIX gapped down to a new historic low on Friday. We came all the way down to a print of 8.56 and then rallied all the way back up to 9.67, so a little more than a point, leaving this hammer pattern behind. And that is, you know, if you look back, there's a few of those that have been printed, but you don't see, you see them in the inverted hammers a lot on here, but you don't see a big hammer like this on the VIX very often. Very interesting. So remember, a hammer requires follow through. But what I would expect is the possibility of a little bit of additional volatility in the market could creep in here. So watch that closely. I'm not suggesting that we're going to get really bearish or anything like that, but having gap down like that and then push right back up, we're going to have to watch this closely and make sure that this isn't some kind of a signal of more volatility to come. So just keep an eye on that as we go forward. Fear, you know, when you're printing prints, I never in my life did I ever expect we would see a sub-9 print in the VIX. That's extreme complacency, in my opinion, and means that no one fears a market sell-off, and that usually is a clue that we could be close to one. So be careful, all right? Let's take a quick look at T2122. Whoops. T2122, if we take a peek at that, you can see we're up here at, you know, close to that bearish reversal zone. Now we can stay up here for a while, but there's no reason to believe that we're just going to collapse right back down. So kind of keep an eye on that and just know that we're up in that zone where we want to be watchful. And by the way, this is just a 4-week new high, new low ratio. That's all it is, but you can see it's very consistent. We get down here in the bullish reversal zone and we rally. We get up here in the bearish reversal zone and we pull back. So watch that closely and we'll see what happens as we go forward there. If we take a look at the earnings calendar today, or excuse me, the economic calendar today, we have new home sales here at 10 o'clock a.m. And those have been last month, September, those were incredibly strong, gapping up huge and actually reaching a 10-year high for new home sales. Now they're expecting a little bit of a pullback in that today. So watch that. If that comes in, you know, more of a pullback than folks are hoping for, that could obviously affect the market. New home sales is one of those that definitely can move the market around. And then after that, we got the Dallas Fed survey. Now Dallas, the manufacturing survey there has been very strong, and Hurricane Harvey really didn't affect Texas at all. You know, go Texas, right? Strong folks down there, they're not going to let something like a hurricane slow them down. And so that is expected to continue to look really good, you know, for that survey. If we take a look here, we've got a bunch of bond auctions, you know, here midday, and then we've got a couple of Fed speakers tonight. So we'll want to keep an eye on that. On the earnings calendar, we have about 30 companies reporting earnings today, none of which, you know, is kind of flipping through, scanning over the list. I don't see any big market mover type earnings reports, but please, you know, keep in mind, you know, it doesn't have to be a big company to move your account around. If you happen to be in one of these trades that report earnings and those earnings happen to miss or something and it gaps way lower, believe me, that can affect your portfolio tremendously. So make sure you're checking those earnings dates and you're planning that into your trading. Don't, for the most part, you want to be really careful about holding companies through earnings, because it's really just a gamble as to which way they're going to go. Now, that's if you're a short-term swing trader. If you're a long-term hold type person, more of a passive, position trader or something like that, holding through earnings is fairly normal. But you don't want to hold through an earnings report right after you buy a position. So what I'm saying there is, if you're going to hold through an earnings report, make sure you have a cushion in the trade. Like, you've got a profit in it. You've got a cushion. If it moves against you sharply, it's not going to beat you up too badly. So watch that closely. And I don't know if we're going to see any big moves today. These companies are not exactly the movers and shakers in the market. So keep an eye on that, though, because when they do move, they will really move on an earnings report. So keep that in mind. Hey folks, if this is the first time you've seen this information, I would like to ask you for a favor to please click that subscribe button on YouTube and the follow me button on Facebook, and also click those thumbs up buttons. Those really help me a lot. It helps, the algorithms of Facebook and YouTube show my videos to more people, so I really do appreciate it. Feel free to drop a comment. I really do appreciate that, and I do try to answer back to questions and comments as much as I possibly can. If you like this information and think it will be helpful to other people, please feel free to share this with other folks, okay? And I want to just say thank you to all of those who do subscribe and follow and watch these videos. It is very humbling, and I do really appreciate all of the kind comments and things that come through. So thank you to those who are participating, and it really means a lot to me. Thank you very much. Everyone have a fantastic day. I wish you all great profits, and I will talk to you all very, very soon. Take care now.